So I wonder if that's at all relevant to the United States. Central bank policy affecting asset prices. Uh, When we look at some of the overbuilding that we've done in the United States, for example, in the energy sector, so we did too much drilling and that led to oil price collapse. Do you think the Fed funds rate and the Fed keeping rates as low as they have for as long as they have, did that somehow play a role in the decision to do as much drilling as we did in the United States?
It probably did, because anytime interest rates are very low, Greenspan had interest rates at 1% for several years, and it certainly encouraged an outsized housing boom that cost us a huge recession. And interest rates at zero, money flows to the hot sector. Last time it was housing, this time it was energy. So we probably had a lot more lending going into the energy sector than otherwise would have happened. And so yes, it had that impact.
So yeah, I don't disagree, and yet that seems to have not gotten an enormous amount of press. We hear a lot of press about how the low Fed funds rate has propped up stock prices and how they want it to prop up housing prices, but we don't hear a lot about how the low Fed funds rate potentially helped cause the overproduction of energy.
No. I mean, energy is the hot sector. But anytime you have zero interest rates on short-term rates, you give a little markup for credit risk, that's pretty attractive to people who want to grow their businesses who are in a hot industry, so you can certainly get the extra lending.